So all I can say is, wow. Brian, what do you have to say?
I say this is the most important earnings call in history, not just a most important Tesla earnings call, one important earnings call for, any company ever.
Yeah. And one of the first things that I'm noticing is that just like other earnings calls like this, when the earnings call is over, I'm going, oh my gosh,
Yeah,
the stock, which did hit 450 for a minute, is back down to 440.
yeah,
So the street will take at least until Monday to get it, as usual.
right, right. Well, that one had a lot to digest, but the start was that the numbers were good. People were
Yeah.
worried about the numbers, and they were saying, "Oh, we delivered 16% fewer cars."
Yeah.
So, from Q3 to Q4. So that would be terrible. And then it turns out that we made more profit than in Q4 than Q3, even though we sold 16% fewer cars, right?
Right.
So, and gross margin went up 2%, right? It was like
Yeah.
18 to 21.1. So profitability is there. And then the hugest thing for me, it was something that we talked about a year ago or more, was when will the quarterly deck reflect that this is not a car company, but is an AI company?
Right.
And that is what happened this time. We have let me just share. Where do we go here? Sorry, let me get something set up on it. Hang on a sec. Um, oh, okay. Stop this. Sorry, give me a little second here.
So, I find that all these technical geniuses
Yeah,
that, I deal with in this show,
yeah,
they don't know how to operate their computers. Does that make any
yeah,
sense?
yeah. Okay,
And by the way, so the same for me.
okay. So in the quarterly deck that we talk about, right? So
Yeah,
here's the earnings stuff and the numbers, but more important than that, than the numbers, the fact they were great, right?
yeah,
The earnings
yeah,
were good, all that kind of stuff. Is that on the fourth page of the numbers, we have active FSD subscriptions, right? In millions.
yeah,
So
yeah,
they added that in,
yeah,
going back to Q4, going up like roughly 800,000 to 1.1 million. So now the analysts who look at this cannot not look at that number,
yeah,
right? And it's going to, projected going forward, that active FSD subscription is going to look really great because they're going to open it up to China and to Europe fully, right?
mhm,
So this FSD subscription is 80, 90% just the United States, right?
right.
So that's a huge thing. Um, and then going down here, so we have like 10, 11 pages of the main part. Then you have pictures saying, hey, here's
Yeah,
Tesla, right? But of 4 pages that aren't numbers, right? Well, there's numbers here, but mainly numbers. The narrative, manufacturing automotive, it still has robotics on there, right? So it's car, energy, robotics, right? On this slide. And then we have support infrastructure, AI training, and compute. Most over 60% of this page is AI,
right.
right? And then the other part is energy. And then here, all AI software, an entire page devoted to AI software, and services, Robotaxi FSD, right? And then FSD miles. So of the four main pages we're talking about our company, roughly 75, 80% is now not just cars, right?
Right.
That is what I wanted to see. And it's in the financial numbers where it's like FSD, and then they have here it's cumulative paid robotaxi miles. So the metrics are there. The way to analyze this company on this deck. So now if an analyst, Gary Black or someone, goes and analyzes this deck,
Yeah.
they would say, I'm going to ignore 80% of the information the company is giving me
Right.
so I can focus on my car only story, right? And then they'll say, are you doing your job? Because you're not looking at the deck that they're giving you, right? So I think that's
So
a huge thing.
so so that blue line there really impressed me. That blue the little triangular blue graph there.
Yeah, cumulative paid Robotaxi miles.
Yeah, because now you can take that and you can play with it.
Right,
And the cumulative miles will just be exponential. I mean, they're talking about, moving it out to 6 more cities and,
right,
all the rest. So this will be fun to take that and and spread it out into future quarters.
right. And this is before we started increasing the number of cars, which they gave us information that the Robotaxi trackers were wrong.
Right.
The Robotaxi tracker sites were trying to count
Yeah.
license plates,
Hmm.
and they missed over half the cars. They were saying, max 240 cars, right? And then it would just, just makes sense. How can you track every license plate? You can't
Yeah.
do it, right? We'd been told that there were 200 Waymos in Austin, and they could only identify 134. So the 200 vehicles were there. They just couldn't find 60 or 70.
Right.
And then here, there were another 250 vehicles in
Right.
San Francisco Bay Area is so huge.
Yeah.
How can you,
Track them all.
see across, 3,000 square miles where all these vehicles are, right? So it was just impossible. So now we know that was the case. Over 500, and he says we're going to double every month.
Yeah.
Double every month.
Yeah.
So that means in 10 months, you could have 1,000 times more if you were to keep doubling. That would mean you could have 500,000.
Right.
Yeah.
Yeah. And what it also means is that in 2 months, you'll pass Waymo.
That's right.
Yeah, right. So those are all going to be good milestones. Milestone of passing Waymo, and then a milestone of doubling every month to get to Elon's 500,000 to 1 million by the end of the year. He also emphasized the Airbnb thing again, where he had said that he thought that would be the end of 2026, and he didn't change that. He did kind of emphasize it like maybe it's going to have. In fact, he almost caught himself. Seemed like he was going to say, well, Airbnb might be out by, and then he kind of pulled back, like maybe that's going to happen sooner than the fourth quarter.
Right. Which would, be exciting. I'm starting to get more aware about how you want to share a lot of information, some of you can't.
Yes. Yeah. Okay. Yeah. Okay. Well, so, all right, let's see. So I thought maybe to me, okay, I never like to rest on the laurels, right? So this is true for salespeople. Salespeople, you give them all these great products.
Yeah.
Okay. And they go out and they sell, and then they come back the next Thursday and they say, well, how come we can't have this? They always want the next big thing. They never have, well, I'm a salesman at heart.
Yeah.
So I want the next big thing. So getting all the information that he gave us about the fabs, the two fabs, the solar fab and the cell fab,
right.
And the fact that the cell fab is, the chip fab rather, the chip fab is probably going to include manufacturing memory as well.
Mm-hmm. Yeah. So that was, I think, a key thing, like for people who are investing in other tech companies. People keep focusing on, NVIDIA, their chips and all that kind of stuff. And Elon's saying the memory shortage is more of a problem than the chip shortage. So he may not even have been saying that, well, the first thing might be AI5, but it's the priority might be to get more memory, to have a memory chip that they can use. The choice between high bandwidth memory, which is stacked memory, where you have like a bunch of memory things that are like 10 layers or 20 layers, however many they are, and in order to get really high density, which is what all of the NVIDIA chips use. Right. But then NVIDIA spent $20 billion to buy Grok with a Q, another chip making company for inference and stuff like that uses SRAM memory, right? So it's a choice of how do I design my system for what kind of memory that I'm making, right? And then be able to produce a lot of it. So they can make choices to say SRAM is probably easier. It's been around for decades. They probably go SRAM type memory, right? It's fast enough. Other people haven't got to work. They did it for inference. So a SRAM based system, and you make more SRAM, is what I think that they'll end up doing. And then how quickly can you get that up, right?
Up.
Yeah, and also it's again less challenging, right? And then so I think that is something that came out of the discussion.
Well, my guess would be that they're gonna hope to get this thing off the ground 3 years from now, because he said he's got visibility on how he can get 3 years out of existing suppliers. And so, and given the scope of what he's trying to do, because again, I'm not as up to date on this kind of stuff as you are. Isn't it true that the memory is usually made by these guys, and the intelligence is made by these guys, and then the packaging is done by these guys over here? And he's talking about doing all three of it at Tesla. So he'd be going again 100% vertical.
100% vertical, right? So there's three major computer memory makers. Each have roughly the same share. Micron, Samsung, and SK Hynix. Samsung and SK Hynix are South Korean companies, and then Micron's US based, right? But then they are still using, Samsung has its own fabs, and then TSMC makes the memory for, I think, the other two.
Okay.
And then, to your point, there's also other people in the stack for the other parts.
Right.
But he specifically mentioned memory as a key thing, and that may be a problem first. And the other thing is that you can, they're already doing stuff where they're being hyper efficient with memory.
Yeah, he
Right?
said.
So he said that they're the most efficient with memory. So they're addressing
By an order of magnitude.
by an order of magnitude. Right. So they're already trying to be more efficient with memory, and then they're still saying they have a memory problem. So even though they're 10 times more efficient, they're designing it to be less memory. So that means I can scale. Like if I needed to have a terabyte plus some chip, right? A compute chip, then I reduce that to 100 gigabytes, right? And then I start making my own. So it's ultimate scalability seems to be more memory constrained for them. Because the question is, can I get to my 100 gigawatts of system, right? So if the 100 gigawatts needs a million NVIDIA chips, or 100 million NVIDIA chips, and I can kind of get them, right? But I don't have enough memory. So it's, what are these things that are limiting this overall solution of everything they need?
Yeah. So then if we get to, and again, this is one of those things, somebody even mentioned this the other day, it might have been you, is that the chips are not going to show up on the top line. Somebody else said, on the show, they go like, well, are you going to sell these chips to anybody else? And it's like, well, I don't see it happening anytime soon, because first we're going to use them in the cars and the robots, then we're going to use them in our own fab, our own data centers, and who knows how many they'll be maybe putting up into space. He says, then, if we have any left over, but it's not very
But
likely.
the good thing is now with the new deck, there'll be a page on
Yes.
here's my AI5 chips, because we have now capacity for all of the batteries, right? All those factories are on there now. Battery factories have been around for a few years. Finally, now we have that, and then we have FSD and Robotaxi are our little page. So I think that's a great thing that we will, and also the software side, the count of FSD, right? So we have that. So we see the software, and then we see these other parts. So then, even though we're not selling them to other people, we'll have full visibility on, on the number of robotaxis and the full visibility on the number of chips, AI5. I anticipate that we will properly see those things, which is, it was a huge gap, because we had to keep inferring. It's like, how much they do? I think they did this much and kind of stuff. And then we'd be off by half. Our count of robotaxis was off by half. Our count of FSD was off. I think people were thinking 500,000 FSD, and now it's like 1.1 million.
Right. Yeah. So going back to the raw numbers again, in terms of the profit, So the 50-cent profit was a beat compared to the 44 that the street was expecting, compared to the 44 cents that I was expecting. Where I think I got it right was I did say that I thought there would be higher margins. I don't think I thought they'd be quite as high as they were, but I said higher margins because why? We didn't hear anything about deals. It's like he didn't do any deals at all. I mean, a few financial deals, like 0% financing, but not like worldwide. It was here and there, blah, blah. One thing that was not mentioned at all that I haven't heard anybody talking about was apparently some of the export markets did really well that we aren't really hearing. We know South Korea is doing well. We know Turkey was doing well, but apparently some of these other markets were also doing well. And I think those were at full boat. So they probably weren't discounted at all, maybe even slightly more than, because it'd be like a rollout, like, creaming the product at the beginning.
Yeah.
So the margins coming in better. What did you see in the financials that interested you?
Well, like I said, just the change in
Yes,
what we're
right.
seeing. I already mentioned that. The Robotaxi miles, like those were really, really good. They were better than expected, more FSD than expected. So basically, all the AI that they told us about was better than expected. And then FSD upfront purchases were 70% were the pure sales. They mentioned that in the call,
Right,
which that was higher than I think most people expected, higher than I expected, was to have 70%. And then we have only 2.5 more weeks for them to sell FSD full purchase, right? At the $8,000 or whatever level.
right.
So that means that, and they had 100,000 sales of FSD.
Let's see.
So that means that of 418,000 cars,
Yeah,
they had 100,000 sales. And the profit from an FSD sale is equal to the profit of a car.
right.
So if you say 418,000 cars plus 100,000
Right.
FSD sales, that's
Right.
518,000 total car unit profits.
Right.
And then we have this, there can be a search of if you want to buy FSD, $8,000 here, I think $6,000 in China, right?
Mhm.
So they sell them in China, even though it's like fully approved. It's kind of like if the Chinese buyers say, if I don't want to be at the whim of a monthly subscription that could double or triple, because he says he can increase the price of the monthly subscription, then they would then buy it now. So for the Q1, that could be a huge windfall, right? If I'm selling already 100,000.
Yeah,
right?
yeah.
And it's not just to new cars, it's new and old cars.
Mhm.
So 8.9 million cars. So by end of Q1, we're at 9.3, 9.4 million total deployed vehicles, of which right now 7.8 million have not purchased or subscribed to FSD, right? Then it's a question of like, of those 8.3 million, how many buy FSD? If it's like 5%, that's 400,000. Because right now it's about like a little over 1%, 1.2% per quarter are getting it. So if this is the last time you can do it, right? If it was a pull forward of a year's worth of it, right? That'd be 500,000. That'd be like double your car profits.
Right.
It'd be a huge one-time bump.
Right. But even going forward on the $100 a month, everybody in finance loves these subscription deals.
Right.
Because it just goes on. And the more cars you put out there, that number just keeps going up.
Right. And that goes to finally they show, like one of the things when Amazon went to AWS, right? Web services to cloud, right? And that became the dominant thing, 4 times, 5 times bigger than the books and the product e-commerce sales, right? They would put it into the deck and say, here's how much we're doing, right? So now, and then they would love the quality of that revenue, even if it was smaller, the quality of it, high margin, all that kind of stuff. So now we will have visibility on that. If we go from, so we have a bump, let's say 400,000, we go to 1.5 million subscriptions, mostly all sales for Q1. That's the last of it. And then it's monthly subscriptions. So then going from 1.5 million, say to 2 million by the end of the year will be 500,000 monthly subscriptions. They know it's all monthly subscriptions at this point, right? And it would be, this, they know that that's the recurring revenue, revenue will repeat every
Right.
year and grow and grow and grow.
Right.
Yeah.
Okay, so then going back to the very big future,
Yeah.
because we had these questions, I had these questions anyway the other day. I don't know if I talked to you about them or not, but the cell business, the solar panel business, the earthbound version for Tesla. So I was listening as carefully as I could. Maybe I need to go back and look at the transcript. But what I heard were two things. Number one, we're going to do it all. We're going to take the dirt off the ground. We're going to take the sand.
Yeah.
We're going to convert it into cells.
Yeah.
Then we're going to make the cells into panels.
Yeah.
And then we're going to sell anyway. That was a bigger deal than I think anybody's expecting. I think everybody thought they would buy the cells and make the panels.
I didn't expect that. I knew there would be integration actually. Why? Why would I think that they would do that?
Because that's how Tesla works.
No. It's also because they have to learn how to do it when they make the solar cells on the moon.
Oh,
Right?
okay. Yeah.
So they're going to start figuring out by 2030, 2035, they will be making huge amounts of solar cells on the moon. Yes, it's different dirt.
Right.
It's regolith and not dirt.
Right.
But they can go from silicon all the way to, so it's not like they can put it off. Well, I don't need to figure that out for 20 years. No,
Yeah,
they need to figure it out for 2030 because they can make a factory on the moon very, very soon, right? In order to start learning how to do it.
Yeah,
Even if it
yeah.
takes them a long time, just like it took a long time to get, the 4680s figured out, right?
Right.
It's like, have to do it. Elon said, I have to do it. I have to figure it out, right? So I have to figure it out. So I can't put off learning it. Just like for Cybertruck, they put in 48-volt architecture and they got it ready, steer by wire, brake by wire, all that kind of stuff, right? It was a huge technological lift, but they needed it in order to do Cybercab and unbox process, right? It's like, in order to do this, I have to learn how to do this, right? I cannot put off eating my spinach before I do it because I must do it. I must survive on spinach going forward, right? So.
Okay. All right. So then the other thing that I think I'll have to go back and listen again, although it may not be obvious when I even listen again or read the transcript, is it sounded to me like Tesla would be making the cells for SpaceX. So SpaceX would just make the finished solar array for going into space.
Right.
Is that kind of how you heard it, or do you remember?
I didn't catch that.
I mean, it wouldn't make sense, I don't think, for both of them to set up their own cell manufacturing.
Right.
One of them could be way more efficient at making way more cells, but then the solar array is a lot different product than the solar panel. So,
that makes sense that you have one do it for both. And then like they say the actual structure after the cells, have to be completely different because it'd be way heavier on Earth. You have wind, you have to be able to hold up to it. Yeah.
So I guess we shouldn't have been surprised if we were listening to Larry Goldberg, but doubling the Capex spend. Doubling from 10 billion to 20 billion.
Right.
And so they said, well, we're going to be building 6 factories simultaneously. And then he says, on top of that, he said it twice, so I know it was true. This doesn't, the 20 billion a year doesn't count. The cells are the chips.
Right.
So,
and then the person, the institutional analyst who asked, that temporary thing go up, it's like, it's going to constantly go up. It's going to go insanely up. This is just the beginning. The ramp is going to go exponential on how much money they're spending. And then he said that they would use, basically said, the CFO said we're going to use debt financing. He didn't totally commit to it.
No, but what he first said was what you and I have talked about for 2 years. Maybe I think it might have been in the book, the Elon Musk mission, is the profits on Robotaxi will probably finance whatever they want.
Right.
I mean, it'll just be humongous.
Well, the thing is, if you go to they're doubling every month, that 500,000 if they kept doubling for the full year, 500,000 by the end of the year, and then they go to the Airbnb model, right?
Right.
So you can have like 1 million, 2 million vehicles in 2027 for
Right.
Robotaxi, right?
Right.
Each one doing 100,000 miles,
Mhm.
right? Then you're looking at 100 to 200 billion dollars from that, right? And most of that is profit,
Right.
right? So you can conceivably 100 to 150 billion dollars of profit next year from the Robotaxi, right?
Right.
And he says, but he's talking about debt financing with that. It's like, I'm not going to use that cash. I need basically 8 to 10 times more money. So I'm going to say I can manage the payments on
Right.
1 to 2 trillion off of that. And then when I get to 5 million vehicles, say the year after, again, $100,000 per vehicle. So $500 billion of
Right.
nearly pure profit,
Right.
right? You know, toss on the energy and stuff like that. And then I'm going to use that debt financing in order to build more stuff, right? So the thing is, some people could say, oh, you're going to use debt and all that kind of stuff. If people think back to Amazon, Amazon constantly ran a loss, but they loved it, right? Because it's like they knew they're going to get more AWS, more cloud, and more e-commerce and all that kind of stuff. Because they knew this is profitable. People keep, you know, Tesla Q will be talking about why is Tesla worth, you know, 10 times more, you know, $4,000 per share. It's got like a $15 trillion company, and then they have a loss. They have a loss. How come they have a loss and they still some money? It's because at any point you can dial back your growth from 40, 50%, 100% per year, whatever it is, right? And then you can make insane amount of profit. This is what Amazon did. But they ran a loss for about 7 years, 10 years. It was a long time where like losses, but revenue kept going up, other things kept going up.
Well, there was another analogy.
Right.
Apple,
right,
when they were just spitting out cash, just so much cash, and then they started giving the stock buybacks every year, the more and more stock buybacks, and yet they were borrowing money. I'm like, wait a minute, why are you borrowing money when you're doing stock buybacks? And it's like, well, because I could borrow it at 2 or 3%. Why wouldn't I do that?
Right. So people need to be prepared. Investors need to be prepared to understand that certain analysis around, you know, discounted cash flows, you know, earnings, something like that, will look. They need to brush up on what Amazon looked like and what Apple looked like in their high growth phases.
Right.
And this will be an ongoing thing. But the thing is, the bullishness of we're going all in. We're doubling the spend. Like for us, it means finally. I
mean, the doubling the spend, you know, sophisticated analysts should be looking at that doubling the spend, taking into consideration Elon's ability to get return on investment capital that he's proven over and over and over and over again. And say that doubling of the spend, you can just turn that into future free cash flow, which should mean that the stock is worth more to that particular analyst.
Yeah. And then some other stuff they talked about were on the call. Elon mentioned transportation as a service. That was basically the vision of everything will be autonomous. He also said, you know, like the robo bus, the robo van.
Right.
And also he said, well, why Cybertruck? You know, we're going to cancel Model S and Model X.
Right.
But why, you know, people in certain comments were asking, why don't you cancel the Cybertruck? Right. And, you know, 2 reasons. One is that he said it was very useful for movement of cargo, robotic cargo movement with a Cybertruck. He didn't mention it, but I will say it, is that the Cybertruck is a perfect vehicle for the moon and Mars.
Okay.
Right. So on the moon, we're going to be making a lot of factories, right? So a lot of fabs, a lot of solar power stuff, a lot of mines, and then you need a heavy vehicle, and they'll probably need to make more heavy vehicles, not less. So like not making smaller, because their main customer is not the consumer.
Mhm.
So like, is the consumer waiting around for an F-150 Uber?
Yeah.
They're not waiting around for an F-150 Uber,
Yeah. Yeah.
right? So again, in terms of the car mix, they're saying 90+% are the 1 to 2 passenger rides, so it's Cybercab. So in terms of the number, because I'm going to a different service, I'm not driving around myself. And if I have a cargo moving service, so cargo movement, so the workman wouldn't need to put in the capital, lock up
Yeah.
$100,000 into a heavy truck. As I need the truck, instead of doing U-Haul or something else, they can say, let me call up the Cybertruck for when I need it,
Yeah.
right? And also call in bots as a service to move it around, right?
Right.
So then only as needed, and then I can get my utilization up from 20, 30% on the truck and the hardware and other things up to 80, 90%, right? So then you can have the cost and they'll still charge 50% margin or something.
Yeah, we've talked, maybe you and I haven't, but I've talked a lot on the show about the idea that, like, I need a handyman right now.
Yeah.
So the handyman comes in, and the first half an hour is showing what needs to be done.
Yeah.
Then the second half hour is him deciding what materials he needs to do it. Then he gets in his truck and he drives down to Home Depot and he personally shops it. And then he puts it back in the vehicle and brings it back. That's 2 hours that I'm paying for this guy to be a shopper, where he could just get on Home Depot's website. He could pick out the things that he needs. Home Depot picks the stuff off the shelf, puts it into a Cybertruck cyber cab and sends it up, and I don't have to pay for that extra 2 hours.
The other thing, if you had a coordinating AI, then the 50 orders that are in the rough square mile that
Right.
you're living in,
Right.
they could bulk send it out
Mhm.
and then drop off at each point. So
Right.
then it would still be pretty quick. It was like,
Mhm.
I'm driving 2 blocks, sending it up. And think if I could also have a deploying, like I get within the square mile with the vehicle, and then I launch 50 drones to instantly deliver all of them, and then they come back. So then it's all super fast. It comes within minutes.
Yeah.
And all the things are sorted because you have a sorting thing, a Tesla bot sorting everything into all these packages, and it's like instantly sorting. So all the stuff comes out, boom, instant delivery, smart warehouse, and then send it all over.
So then another question that we all had, and it was one of the questions in the deck, is what was it that caused you to slow down the deployment of Robotaxi? They didn't say it this way. You said the end of the year, and then it didn't happen. And so they were like a little defensive, and they're like, well, we're rolling it out now. But I thought that the two reasons that they gave were kind of what, I don't know if you said them, but some of my co-hosts, I said, I think we're saying this in advance was, and I was poo-pooing it. I said the infrastructure problem, how fast to get, where they go to get charged and how they, I thought that would be kind of the no-brainer part, but apparently that was part of the problem.
Yeah, which is, I guess it's more complicated than I thought. I would have, been more prepared. Well, I think it goes to sometimes they have a blind spot.
Yeah, yeah,
Because they need to hire me. I wouldn't have missed that. I would have I'm been concerned about the lack of infrastructure for a while, right?
yeah,
So
yeah,
I've been saying that for like a year or two.
Yeah,
I've been saying they need to fix their deck for a year or two, right?
Right. Their microphones, they finally fixed their microphones, but they still had a glitch.
Yeah.
It's like all the tech guys I talked about, all the tech guys, all my co-hosts are like brilliant at tech. And it's like, oh, you don't know how to, share your screen or whatever. But I'm guilty as well. Okay,
I need
so
a Tesla bot to do it for me, or I need to have a digital Tesla bot to do the stuff.
That's right. Okay, so SNX gone. We talked about that.
Yeah.
The SNX are gone because
They're
go
gonna
ahead.
make a million
Didn't you say this?
Optimus.
I
Yeah.
think you said this just the other day.
Yeah. Yeah.
Yeah. Tell people that you might not have watched it.
Oh yeah, so that they're going to stop making SNX in Fremont, and then that's where they're going to expand their million bot per year lines
Right.
is in Fremont. Um, Although I think they may be underselling it because I think that they would have the room to do a 10 million bot line there.
Oh, yeah.
I think that they have the room to do a million bots without booting SNX.
Yeah.
But again, it's a distraction. It's
Yeah.
if I'm still mixing it in or having whatever, it's making things less efficient, right? But when they fully remove SNX and have a whole dedicated Fremont factory, because the Fremont factory can make it can make 500,000 plus vehicles. It was a
Right.
NUMMI plant. It was supposed to be it was big in its day. So if you can make 500,000 um, cars in the NUMMI plant, you can make 10 million bots there. You just have to
Okay.
clear it all out.
So I was on a what do you call it? There was a group, Brian White was doing a group between the earnings report and the earnings call. And on that group, I forget who it was that said this, but it's like, okay, Elon says he feels like Elon is saying version 3 will make 1 million bots. Version 4 will make 10 million.
Right.
Version 5 will make 100 million. So it may be that they're going to be doing this million bots in Fremont while they're building the 8 million square foot factory in Texas
Mhm.
and putting the line up in Texas to do version 4.
I think they may have a bit of a couple things going in parallel. They make because it takes, if it's a year, 2 years to do okay, 1 million bots and then 10 million bots, and then version 3 and then version 4, that you'd want to have a version 3 line and the version 4 lines spinning up at the same time, right? So they're overlapping, right? So I think that's also part of the space issue. It's also that they have Cato Road was making the 4680 batteries, right? And that was a small one at 1 to 2 gigawatts, up to 10 gigawatt hours per year, versus the full plant at 40 gigawatts or 80 gigawatt hours per year for the batteries. So I think that they will have a version 3 lines, and then they'll in the same location. So in Fremont, they'll have the million version 3. And then at the same time, they'll be experimenting, getting ready for the version 4. And then there'll be some kind of like handoff thing where it's like, you're doing a bit of both on it. Just like you have like S and X, you have different things going. So
Right.
I think they'll have different things going with a 3 and 4 at the same time, and then 4 and 5. So you'll have two things going on in terms of overlap, in my thinking.
Yeah, so I figured out at one point that it would take about 80,000 to 100,000 square feet to do the million bots, including all the raw materials, all the even the space to make the actuators and everything else. I thought, maybe 200,000. So if you're talking about an 8 million square foot facility that's only for Optimus, you're talking 100 million. You can make 100 million in that facility.
Mhm. Right.
So, so that's pretty. I mean, 8 million. That's only slightly smaller than the car facility or the existing facility down there.
Mhm.
What does it say here? Oh, they exited 2020. Here's a big one. I have some disagreement from my guys that I was just talking to. They exited 2025 with a big backlog of cars.
Mhm.
So I'm going to guess that was in China primarily,
Mhm.
not necessarily Berlin, and not necessarily even the US, but a big backlog in China. So one of my statements has been, maybe you and I have talked about it, I don't remember, is that we could have a very good first quarter and maybe even a very good second quarter, year over year comparison,
Right.
because last year we were shut down.
Right.
So I can't remember, do we 380 something last first quarter?
Yeah, something like that. Yeah.
Some really low number. So maybe if we could even get to 450 in the first quarter, that'd be kind of a beat.
Right. Yep. But this is, I think with the conversion, so we had 362,000,
362. Okay.
362,000 in Q1, 410 in Q2. So quarter over quarter, it's gonna, year over year to the previous quarter, yeah, we'll easily, handily beat that.
That's what I'm thinking. That's what I'm thinking. So we get off to a good start with that. Then some point we get unsupervised. So he mentioned unsupervised, it'll be a slow rollout. So he's going to continually reduce the nag. And so when we get 14.2.2.2.9.7.8, that one will have, less lag than the one before it. So, and then I guess at some point the nag goes away.
I think because you can sell 20% fewer cars and still have more earnings, right? So we already showed that that's the case. So the cars don't matter thing is gonna really start taking hold. And then the other thing is that he mentioned that we'll have 10 times more Cybercabs than every other car.
Right. He did say that. Yeah.
So that's going to transition over the next 2 years.
Right.
That's going to happen. So, and then in terms of like the next 2-3 quarters, the key is, are we doubling the number of Robotaxi every month, like he's talking about, right? If we're doing that by April, the next call, we should be at 2,000 to 4,000 vehicles, right? And then by the one after that, we're at 16,000, right? 16,000 vehicles, and then by the next quarter after that, we're at 100,000 to 120,000, right? So those is the metric by which things will go crazy or not, right? And even though we don't have good tracking on the Robotaxi trackers where people try to count them, right? We'll get within order of 2, right? Well, okay, if there's 2,000 vehicles, we'll count 1,000, right? And it's going to be clear that's
I think the tracking will go away when we get to big numbers. I think nobody will care anymore how many exactly, because there'll be Teslas everywhere. So he said 5 to 10 times as many cars as combined all other cars will be the Cybercabs. So if you take even 2 million and you say 5 to 10 times that, we're talking about 10 to 20 million. Now we got 80 to 90 million a year being manufactured now. I think you and I talked about this the other day too. It's like we won't need as many cars made each year someday.
Yeah.
But we also have to replace 2 billion cars that are out there.
Right.
So in the early days, they're going to, 10 to 20 billion, they'll still need somebody else to be making something, Cybercabs or regular vehicles. So
if you're replacing 2 billion vehicles, then you're looking at 200 million. Even if you're 10 times more efficient, you still need 200 million, right?
Right.
So, but that goes to the Cybercabs being at the 20 cents per mile.
Yeah.
So not just the $1 per mile level to get to 1 trillion miles, which needs 10 to 20 million vehicles, right? It's meaning that we're going to go to the full, I think 𝐼𝐸 tested at 10 to 20 trillion. So then you need to go to the 100 to 200 million vehicles, which means if I'm going to do that in a 10-year transition or 5-year transition, I need to do that in at the 10 to 20 million vehicle level, right?
Yeah.
And they can make so many of them. And the other thing is that after the first 20% something like that, you won't be at the 100,000 mile level, because I'm going to go to rural areas. I'm going to go, all around the world. So then they'll be less efficient. I may only get 20,000, 50,000 miles of vehicle, but it'd be so cheap. Also, the Wright's law thing about how, by making so many, you can drop down in half in price and all that kind of stuff. Plus, cheaper batteries.
Right.
That. So it will be. Cybercab will be the most manufactured car vehicle in the world
by a lot
ever history.
Right.
Yeah,
Won't even be a close. Yeah.
want to be close.
Right. All right. And so yeah, so then those go out, but we don't really care about the vehicle at all because what we care about is the use of the vehicle, and that will be exponential, or that will be another one of these deals where it for at least well, okay. So he brought this up to. I'm sorry. Let me finish my thought. So each year you had a car. The first year it might do 60,000 miles. Then the next year it does 60,000 miles. And but now you've got twice as many cars.
Right.
So you're constantly uh, adding more revenue per year every year based on the same fleet that you're adding to the fleet, but the fleet's just anyway. At some point, you get to a stasis, and then that won't keep happening. But at least for your first few years, it'll be this massive increase in the amount of revenue that's coming in and the amount of profits that are coming in.
The other thing is that the upper limit cap on how many need to be made is far higher, because if I'm making transportation movement of goods 5 to 10 times cheaper,
Right,
then demand will surge by 10 to 20 times.
right.
So we may need 1 billion, 2 billion Cybercabs,
Yeah.
because you'll be saying, well, it only costs me $1 to move that thing from here to there, and I want it to move.
Yeah.
So I need more vehicles to do it, because the overall usage will be higher, right? Just like things like how many iPhones were made, versus how many Nokia phones were made.
Yeah.
How many smartphones were made versus that. It ended up being 10 to 20 times higher than what the old paradigm was. So
Right.
you can't compare the old paradigm to the new paradigm, or you can, but it'd be less. The new number is 10x, 20x higher, and because you're driving the cost down.
So Brian White and I have this ongoing fight over what the robotaxis or the cybercabs actual cost per mile will be to Tesla, not the retail or the selling price, but the cost per mile for Tesla. I'm agreeing with Cathie Wood. It's hard to, I can't even see how you get over 20 cents. But one of the numbers that Elon gave us another hint, another little bit of information. I was only figuring 250,000 miles before you'd retire the thing. And Elon says, no, this car is built, it's designed like a commercial vehicle. It's designed to last a very long time. So we might be looking at Cathie's number. I think Cathie was at 500,000 miles before the car is retired.
Yeah, I think could be 1 million miles. It could be, again, it's things could be a lot better. One thing else I would point out from another source was Lemonade talking about their insurance prices.
Right.
And also the risk.
Yes.
Right. So they have this view, they're projecting forward, how accurate are they? That, the collision risk is already,
Half.
only half what it is, right? And then they're projecting by version 15, version 16, version 17, and you can get to those in about 2 to 3 years. It looks like you can be about 10 times safer.
10 times safer. Okay.
Right.
Which is what Elon says, right?
Right, what Elon says, right? But someone else is putting it into a chart, right? Because
Yep.
when they run the numbers, they got to run, actuaries got to analyze everything on the risk, and they got to go forward and say, what does our model look like going forward, right? So I don't think that was a willy-nilly, I'm just randomly making a chart. I think that they are modeling out what's going to happen with version 15, 16, and 17.
Right. Yeah. And so that was one of the biggest bones of contention is the amount of what do you call it, insurance per mile. So I asked Grok, I said, what on liability? Because I don't think Tesla will care a nickel about the collision side. If the car's in a collision, they'll just put it in one of their warehouses and they'll just fix it. They won't care. It'd be so small. The amount of money that they're talking about be so small. I don't think they'll even have it insured. So on the liability side, though, that's where the big risk still is. And so I said, what is the average or the rough, really, really good driver rate per mile for liability insurance? It's a nickel. That surprised me. Right. So if you drive 10,000 miles a year, it's only costing you $500 a year for the liability side if you're a really good driver. So
the other thing, the repairs, we can have Optimus repair centers. And then the cost, because right now it's so expensive to repair a Tesla,
Right.
right?
No, not
But
anymore.
if repair costs drop by 10 times,
Right.
so the risk drop by 10 times, the repair costs drop by 10 times, the cost of insurance could go to 1%.
Yeah, right. Yes. Yeah, that's what I'm looking at. So I figured half because Lemonade just said half.
Yeah.
So in my model, I'm modeling it at 2.5 cents per mile is the insurance impact. But to your point, if it just gets safer and safer, and the insurance company that they use, or if they do it themselves, we might be talking, like you said, might be a penny, might be a mile just for the insurance. Yeah. This is where the insurance companies are a little bit nervous. I think this is why finally retired. He realized that the insurance companies are going to all be gone. He was asked that,
Well, the thing is, you have to, have you have to have, data-driven thing. You need to like get out
Right.
there and do it because, right now they're holding prices high, even though the risk is dropping. But if the miles convert, driving as a service, because we can get to 1 trillion miles of Tesla driving in 2 to 3 years, right? So that means the bulk of our usage shifts over, even though the vehicles
Yeah.
are still not there. You only like 5% of the vehicles or whatever like that, but over half the miles go away, right?
Right.
Or it's the other thing. So then, but the insurance is on the miles,
Yeah.
right? So
Yeah.
then your entire insurance business model gets torched.
So, okay. So now they're talking about bundling. They're saying that if you bundle the insurance with the FSD subscription, if your insurance would be normally, let's say today, mine's crazy, $250 a month, but I don't know why ours is so high. It's a Tesla and it's in California. Oh, that's the reason. Okay. So $250 a month, but let's say a normal rate, let's call it $100 a month.
Mhm.
And let's say that your Robotaxi, sorry, your FSD is $100 a month. But your FSD now reduces your risk on your insurance by $50 a month. Now you bundle it together and you get insurance and FSD for $150 a month.
Right.
So now your net cost of your FSD is only $50. At some point, it might get to the place where it's a wash.
Mm-hmm. So the reports from Lemonade, from their website, is that charging you per mile. So if you drive very, very little, if you drive 0 miles, the insurance is still $30 a month.
Okay.
Because your car could be crushed under a tree,
Sure.
Whatever, right?
Cost of the just the processing.
And it's a processing, right? But then the actual cost of insurance when you're driving it seems to be in the $50 to $70 per month range. So if you had relatively low usage, maybe not insanely low, 5,000, you could be in the $50 per month range. And then, more heavy usage, 20,000 miles, you be at the $70 range because the cost of the miles is half. And then if the cost goes down to 75%, so 4 times cheaper on the per mile basis, you can get toward that $30, $40, $50, right? So let's just say in 2 years at $50, right? $20, even though you're driving a bunch, right?
Yeah.
So to your point, your insurance just went down from $250 down to $50.
Right.
Because it went to get over to your area.
Yeah.
Tesla will offer have the data. Lemonade had the data. Everyone else will say, okay, we have the data too. We have to copy and match it. Everyone then goes to the $50 per month range if you're going to offer insurance on the Teslas and for over half of the miles driven in the United States, right? So it's like that becomes the market. And to that point, then if you're buying a lot of FSD driven miles for your vehicle, right, then you would be you could pay $200 and still come out ahead. But although that would come down because the competition would drop it, so then it could go towards 150. But then it also could be that that goes to the change from car ownership to I don't need to own my Model 3 or whatever. I can switch over to just using the Robotaxi service. they can
Right.
shift towards just the per mile service.
Right. But if you were still owning the car,
Yeah.
you could get to the place, again, we've talked about this before, where Tesla is ensuring you don't even have to go through regulators anymore because
Mhm.
it's Tesla's liability when the FSD is on.
Yeah, right.
So if you're using FSD 100%, which most people will be at that point,
Yeah.
if you're using FSD 100%, then Tesla can charge the $50 a mile in their head or, in their bookkeeping.
Yeah.
But it's just part of the overall cost per month for FSD.
Right.
So
So,
now
so I think that within 3 years, it's the transportation of the service thing becomes the dominant thing, right?
Yeah.
That it's only the per miles that matter, and then the vehicle count is irrelevant. Yeah. So then that would be the transition over the next 3 years that would happen.
It's really nuts. We could go for about 7 hours here.
Yeah.
Let's see here. Fortunately, I have Jeff Lutz a little while from now, so I can get him to go over the rest of this. The battery pack is currently the limiting factor on car production.
Mhm.
Did you hear that?
Say it again.
The battery pack
Yeah.
is the limiting factor on car production right now.
Okay. Yeah, I missed that part.
Okay, yeah. So they're saying that they think with the 4680s and switching the 4680s to some of the Model Ys and whatnot, they're going to resolve that. But it has been a limiting factor on car production.
Yeah, that's again surprising that they let that happen. They should have been able to figure that out.
Well, maybe they thought 4680s were going to happen faster than they did.
Yeah.
Let's see. Margins on energy will be coming down, they said. I was forgetting why though. I guess competition. They said, there's some, even though there's an unlimited TAM, other people are out there that don't have as good a quality, so they're bringing the prices down on the mega packs. But they also said that they're able to get savings now, so that is going to be, maybe the margins will be impacted, but maybe over time they'll get the margins. But right now they're at 28.5% margins.
Right.
So if they come down to 25, oh well.
Yeah. But I think the big thing to boost margins again, probably sometime next year, is the fact that they have the mega block with the built-in transformers.
Right.
Because there's a huge shortage of transformers in the mid voltage range, and they'll start production middle of this year. So at some large production, say latter half of 2027, right? When those things are in volume production, then those will sell as many as they want at higher margins, because the AI data center builders who need to build a lot of power sooner, if they don't want to wait, they have to buy battery storage with the transformers, and then Tesla will be making those, and the others will not. So the China producers won't have their own transformers built in to their system, and then also likely won't be able to import it into the United States or other places.
Right.
And it's about 1 to 2% of every data center build will be these, like 1% with just mega packs, probably 2% with mega packs and transformers. So if we're building out, say $300 billion, $400 billion of that, then that's in the range of $8 to $12 billion. That would be in that business.
Okay, so one last thing, going back to first of all, where are we on the stock right now? We're at 438. So, it blew off at $12 there, back to 438. But again, we'll see that later in the week, I think. Anyway, the other thing was that the profits, as good as they were negatively impacted by both FX, the dollar exchange, and also by losses on
Tariffs.
tariffs was 2. Now that may be ongoing unless they're trying to change some of that stuff to the U.S. And then 3 was the Bitcoin.
Mhm.
So they had a pretty good loss on Bitcoin, like 25% or something.
Right.
Yeah. Yeah.
So yeah, I think that stuff can turn around, but I think it's the other big things, which is, we're transitioning to an AI company. The re-rating is going to happen,
Right.
and if these things are happening as they're saying, like 10x parameter models, all that kind of stuff, and what's happening with Grok, it's really the AI story that
Right.
becoming more of an AI story. So, I can think by Q4, we have Grok 5, Grok 6, and then we have FSD 15, FSD 16, and a lot of Robotaxi. Like
Yeah.
if
Yeah.
we have over 100,000, 200,000, 400,000 Robotaxi,
Yep.
right? Then all of, even fellow Tesla bulls
Yeah.
are not expecting that. Like
No,
Joe Bhakti is
I-
40,000
Yeah.
for the end of the year.
Yeah.
Warren Redlick at 10,000
Right.
Robotaxi by the end of the year, right? Other people talking. So we could be at those levels by the middle of this year.
Yeah.
And that would be the dominant story, not
Oh yeah. Well, I mean, 100,000 is $4 billion a year in profit.
right.
So at 100,000, yeah, it's going to move the needle.
Right. And then for the Q1 is how much do we pull forward the pure FSD sales, right?
Yeah.
Because right now, like we sold 100,000
Yeah.
last quarter.
Right.
So now your last chance to get it is now,
Yeah.
right?
Yeah.
So I say we sell at least 200,000, 300,000 of those. If we sell 300,000, an extra 200,000, that will be more than any dip in car sales.
Right.
And they're as profitable as that. So then the number, as you saying, it'll be a surprise on car sales.
Right.
And then there's clearly gonna be a surprise on
FSD
sales. So that's Q1, right?
and another increase in energy storage. You're going to get another increase there.
Yeah. So then Q2 is, and then to combine that with 2,000 to 4,000 Robotaxi, and then for the next quarter, it's still have FSD sales, now more subscriptions. It's probably can drive around and use your phone. So the inflection point of value.
Yep.
Elon has said that when you get that value, he's going to bump the subscription price.
Right.
So maybe he doesn't do it as a shock and awe double, something like that, but just 20%, right? 20% in all subscriptions.
Yeah. Well, I think at some point I think we've talked about this before. At some point, the subscription has to be based on miles or based on whether it's used commercially or just used around the house. I mean, I shouldn't pay $100 a month and somebody that drives 30,000 miles a month, gets it for the same price. That'd be crazy.
Right. So, but then you won't be as angered by the fact that you're paying more for that if your insurance went down, and then your overall net savings are there. Right?
Yeah, 100%.
And then that will be in 15 states or something like that. It's like the 10 states that Lemonade has, and then however many that Tesla has. But the combined number is an extra like 5, because there was some states where one is and the other isn't.
Right.
And that they include big states like California. So right now it's in Arizona, and so it spreads, kind of Oregon, and then California, Texas, Florida, like ones where you can have where about 70-80% of the vehicles are. So even though they're only half the population of the United States,
yes,
the number of vehicles is actually higher in those locations.
Right.
So,
Ryan, I think we have to wrap it up here.
Yeah.
First of all, I'll probably have to take a nap between now and Lutz, but so anyway, come back later, probably about 7:30. You'll get to see Jeff Lutz answer the rest of my questions, just lines and lines and lines of questions that we didn't get to. Brian, as always, thanks for coming on, and don't forget to follow him. his station, his channel is going to get an upgrade. He's going to be doing some more stuff, some really interesting stuff. I'll be talking to you more about this soon. All right, Brian, thanks again.
Thank you.
And to all of you out there, it's been great talking to you.